Hey guys, this is Colin Murphy from colininvestments.com, and on today's show with Scott, we talk about my journey from Ireland to Tampa, Florida via London, and how I ran up to $100 million in sales and fix and flips in Tampa, Florida. We talk a lot about how to scale your business, how to find private money. We dig deep into the Tampa market, the pros and cons of it, how the foreclosures are affecting it, where we think the prices are going to go, what the best property types and tenant types to target are, and a lot more besides. I think you're going to enjoy it.
This is the Note Closer Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here today, and extremely excited for this episode. You all have listened to me a while, know how much of a fan I am of, as I say, God's waiting room of the Florida real estate market, and how I've bought notes there and real estate there for the last 10 years. And we like to focus on the bigger markets, not only in Florida, but all across the country. So I'm really excited to have a buddy of mine. He's a full-time investor in the Tampa market. He's also a real estate podcaster. He's got a big passion for helping people, but he's got such a unique and different story than most of us when we get into real estate investing. So I'm honored to have my buddy, my buddy Colin Murphy joining us this morning live from sunny Tampa, Florida. What is going on, Colin? How's it going today, bud?
I am awesome, Scott. It is great to be here.
You know, I love the fact, you've been in real estate as an investor. You're also a realtor. You've done a ton of fix and flips in there, but you've got a little bit different of an accent. It's not a Southern accent for the most part. And let's talk about kind of your journey to where you got and where you're from. How's that sound? Let's start off so folks know who Colin Murphy is.
Yeah, I'm very happy to. So I'm originally from Ireland, as a lot of your guests will probably guess, with a name like Murphy and a funny voice like I have. And I'm in my early 40s now, and I've been investing in real estate, since my mid 20s. But it all started out in London. Funnily enough, I lived in London for 3 years when I was a young man, just after university, and I started selling advertising space in real estate magazines and showroom space for real estate exhibitions. So it was an awesome introduction to both real estate and to selling, because I used to be traveling all over Britain and Ireland, number one, attending like 25, 30 shows a year, work hard, play hard, talking to all of the Florida developers, the Spanish realtors, the Turkish builders, people building resorts in Belize. And I was hanging out with these people all the time. And then I used to travel to all the places and try and get them to come to the show. So buy a half page in the June edition of the magazine, buy 30 meters at the big show in London. So I got to travel a lot to meet all these people. And it was just a whole lot of fun from about the age of, 23 to 26. And then after that, I went back home to Dublin and I opened a real estate office that was selling real estate in emerging markets. That was mostly in Eastern Europe and Central America. And this is for a British-based developer. So that business did great for a few years. The Irish were very passionate about real estate. This was in the mid 2000s, like 2004 to 2008, where there was a tremendous real estate boom all over Europe, just like there was in the US. So I met a lot of, hey, while that sun shone, and sold a lot of real estate to Irish people in those far-flung locations, because people didn't have the money to buy in France. Well, they could buy in Bulgaria, for example. It was a little nuts, to be honest, and the business did great. But the 2008 crisis just wiped us out completely. I had to close the office, let everybody go except my manager, lick my wounds, and just start again. And that's where Florida comes into it, because in 2009, myself and my buddy David Shaw and his wife Catherine, we set up a company called Torcana, and we started selling Florida condos, mostly in Orlando, to British and Irish buyers. And if you remember back then, Scott, as I'm sure you do, a lot of developers were making good money doing condo conversions, converting apartments into condos and making a ton of money by selling them off in ones and twos. And when those guys, lost their financing and their business model crashed because no finance was available for condos, people like me, and I was one of the earlier guys, I was able to come in and market these condos for 30 cents on the dollar to cash buyers that were buying these $80,000 condos in these lovely gated communities that used to be 230, 240. And we did really well from that for a few years. And then we started selling in a beautiful place in Tampa called Waterside or Coquina Key, just stunning place on the water in St. Petersburg. And, we did that for a few years until the low hanging fruit went away. The big boys came in. I used to be selling B quality products for under 100,000. And then a few years later being offered C quality products for 130,000. And it was just like, we need to pivot here. And generally every 5 years, I find myself pivoting, over the last 20 years. So that's around 2014, we started getting into the fix and flip game and just started buying our own houses and just working our way up from, buying one, fixing it, selling it, buying two, fixing them, selling it, up to about just almost 100 fix and flips in 2019. So we did very well from Tampa. I've more or less been investing full-time in the Tampa market since about 2014 and in other places in Florida and the United Kingdom before that.
It's funny that you talk about the condo stuff, because we bought a lot of debt and had on condos in like gated communities around Celebration,
Wow.
Condo
the discounts were unreal.
Oh, totally unreal. I mean, you're right. Even Miami Beach condos were going for 5-10 grand back in 2008, 9, and 10, and they started coming up. And it took a while to foreclose. We had that, but we ran into that. We bought some notes direct from a couple of banks, and they wanted it off their books because they were the borrowers lived in England. They lived overseas, over the pond, and it was a lot more to reach out to them to serve them when they started the foreclosure process. So yeah, there's a lot of international money coming in, not only just the United States, but also Florida at the time. I think they said that close to 40, 50 cents on the dollar of every dollar spent on real estate was international money coming into the Florida market, because people were seeing the bargains and weren't mind holding on to it for 12 to 24 months to really take the property back. So yeah,
I believe it always had that tremendous international name recognition. I mean, it was the only place in the US I could have feasibly sold real estate to British and Irish buyers. I couldn't have convinced them to go to New York or Boston or, California.
Ohio.
Florida, yes, that was an easy, especially when the numbers look great.
Yeah, exactly. Now, you've done a ton of fix and flips the last couple of years, and you really know the market there in Tampa. And, Tampa's, like I said, it's one of our favorite markets. It's, Tampa and Miami were the first two bigger markets in Florida to really rebound back. That's where a lot of stuff took place. Miami, obviously a big international flavor. Tampa, a little bit more with your Florida investors in the neck of the woods. I mean, yes, you had a lot of international money coming up there to get better pricing than Miami. But let's talk about the Tampa market in today's numbers for the most part. Obviously, you've seen a big shift in product or pricing and stuff. And where do you see, with your fix and flips and the stuff that you're doing in the market, what kind of price range do you see the biggest bang for your buck that's more available on the market for people, if there is any inventory right now?
I mean, what's the kind of safest and best investments for me now are kind of consistent through any market cycle. And that would be suburban, lower middle class, single family homes priced about 20 or 30% below the median. I mean, that is a very safe strategy that will see you a lot of ups and downs, because if you're a long-term real estate investor, you are going to see a lot of those ups and downs. So obviously the price of those properties changes through the years. Whereas, 5 years ago, I was maybe selling a fully renovated 1,300 3-bed, 2-bath for $115,000. Now I might be selling it for $190,000. But the place on the ladder is still the same. I'm not going too low on the ladder where you've a lot of high maintenance, a lot of evictions, a lot of low income tenants. That's a lot of work, basically. I'm not going too high on the ladder where you're doing the fancy pool homes, the $500,000 plus. That's a very price sensitive area. The cap rates are nowhere near as good. So my place has always been a couple of steps below that middle rung of the ladder. And you're always going to be pretty safe, kind of buying a nice suburban single family home. Try and get one where there's a high percentage of owner occupiers. The places I targeted in Tampa were generally about 2/3 owner occupiers, 1/3 renters, which is about the norm for the country as a whole. And that's served me very well. And we went very deep in that segment.
Yeah, no, that makes a lot of sense, because there's always people can be looking to buy a home. If you're going to be that first time home buyer, set 250 and below is where I like to try to play at that price point, because it's the same. Same. At 250 may be different in Ashtabula, Ohio versus Tampa, Florida, but that that wherever that market that price point is for that first time home buyer, tracking that stuff, and that's what we see a lot of the distress still happening too. Are you seeing? Days on market and things like that have probably shrunk some as inventory has gotten maybe a little bit tighter.
No, they've shrunk a lot. I just saw some recent stats it was already a very busy market, let's say a bit ago, let's say December 2019, your days in market were about 60 days, which is very quick, but now it's less than 40 days. Wow. So it's like 50% less than what it was. And so it is a very, very, it's very seller dominated market. It was already pretty tight in 2019 and even late 2018, 2019 started tightening up. And in 2020, it just found another gear in terms of the price surges and the demand and inventory shrinking from kind of like 3 months to 2 months, which is just nuts. You don't see that very often.
Yeah, it's definitely crazy with less production or less construction and new build areas being built. You still have people moving to the Sunshine State. From other areas of the country, whether it's California or people moving up from New England and New York, trying to get the heck out of the big cities to some place where they have a little bit of room and some sunshine. As we like, the snowbirds,
the stuff that people liked about Tampa, they like it even more now. They like it's obviously, it's got low taxes, which is always good, and it's landlord friendly, which is always good. But it's still priced about 25% below the median US prices. You still get a lot of bang for your buck here. There's a lot of space. You can get a nice house for what you'll buy a shoebox for in Connecticut or New York or Boston or somewhere like that. So you can buy, a lot of people are moving for that reason. The economy is obviously quite diverse, and it's recovered very quickly. Tampa has turned out to be an extremely resilient place, in terms of getting through COVID. I certainly can't think of anywhere I would rather be in March 2021 as we're recording this show than Tampa, Florida, in terms of just the climate and the culture and everything else. So very, very high demand. When you have that, a market that's already good, and then you have an acceleration in the population growth, which it always has had strong population growth. It passed out New York to be the fourth most populous state about 6 years ago and hasn't really looked back since. So it's on the up and up.
Yeah, and that's the thing, is Tampa is got more industry in it than I would say like Orlando, just down I-4, which is primarily tourism. And so that's my next question. It's maybe a little early to tell, as we're still in the foreclosure moratoriums and things like that for the most part. But have you sensed, let's take it back a year, if we can roll it back a year, were you starting to see maybe an increase in distressed listings a little bit, maybe some short sales popping up on the market a little bit more so than before? And you may not track that, but that's always one thing I look at, and especially in the bigger cities of states. Okay, if you start seeing an increase in short sales, that's usually the first sign of an increase in distress in the market, especially Florida, where there is a little bit longer foreclosure time frame compared to Texas. You know what I mean?
You do. To be honest with you, you're not, for the simple reason is that people that are struggling to pay their mortgages, number one, obviously they've got forbearance, so nobody's kicking them out anytime soon. But the main reason you're not seeing any surge in short sales is because people have more than enough equity in their home. They're not underwater in their mortgage, and therefore no bank is going to let them sell it for less than the value of the mortgage. So there's very few people underwater. I can't see any situation. Prices increased by, median sales prices went up by almost 15% over the last year. I don't know how anybody is going to be underwater in a mortgage. Lending criteria over the last 10 years has been a lot tighter than it used to be in the crazy days of 2005. So most people are, putting down a little bit of money. Obviously, you still had 96.5% mortgages and seller contributing to closing costs. So people are buying houses with not a lot of skin in the game. But if somebody bought something for, $200,000, 3 years ago, their mortgage is probably 180 and the house is probably worth 230. So there's no short sale going to happen.
Right. No, that makes a lot of sense there. One of the things that I'm always curious about, especially on that new construction side, where you see a lot of people, you mentioned about banks concessions. Bank of America on Fannie or FHA loans was willing to contribute the down payment and then pay up to towards $7,500 towards closing costs too, where people would literally get in with nothing down. And one of the things that we see in different areas is people go in, buy nothing down, no skin in the game, as you mentioned. And it's been such a weird, 12-month history. We see a lot of those places that are building like new homes. We see those, new homes, $500 down, get in. That they budget, for the mortgage and don't have the accurate tax values. I don't know if you've seen any, defaults on or people, at the 1 year mark or 6 months a year when the tax appraisal comes back differently. Where now they're being taxed on the full improvements versus just the land on the new build side. See any of that by any chance?
No, I'm not seeing much. I'm not really in that game, but just in terms of the distressed as a percentage of the total market, I mean, back in 2011 and 12, you're kind of at the peak distressed versus normal. Probably 40% of all homes, for sale were in some sort of distress, like, foreclosure or a short sale. And that went right down to kind of 7-8%, when you get into 2018, 2019. And it's even lower now, despite unemployment spiking, despite, lots of industries, hotel industries, retail, a bunch of other ones struggling. It's much lower. And part of that is because it's artificially lower. But nowadays, in one of my counties in Tampa, it's called Pasco County, 5 or 6 years ago, you might have seen, 130 or 40 auctions a day. And then, 2 years ago, it might have been down to 50, and then it was down to 30. Whereas nowadays, you're lucky if there's 6 or 7. I mean, it's just, there's hardly any happening. I mean, it's just a tiny, and sometimes you see misleading headlines in the newspapers, like Florida foreclosures have spiked. And what really happened is they shut them from from March to July, where there was literally none. And then they went from like 1 or 2 to 6 or 7. So people are saying foreclosures have tripled. Well, they're still about 10% of what they would be in a normal year,
Yeah, no, I hate seeing those fake news headlines. It's all relative. Oh yeah, we had 0 foreclosures because we stopped it, but we got 10, so it's a 1,000. I always laugh about that, but that's why I love having local investors on that know what's going on in the market. Yeah, you and I talked about this the other day. That's where I was leading you about. Hey, we don't see that much. We might bid on 1 versus bidding on 20, at the auction, stuff like that.
And it's so competitive. There's there's not that many of us buying auction properties right now. There's like 6 or 7 players, that are doing it. And whereas before there might have been 30 or 40 deals going through, and there's enough for everybody. If you don't get, you literally might have 15, but you only have money to buy 3 or 4 in any given day. So if you don't get some, you'll generally get a couple. Whereas if you have 6 people going for 4 auctions, you just start seeing crazy stuff. People start dropping their standards. They start assuming, prices will go up a lot in the next 3 months, and the rent budget, I mean, probably 30, but let's just do it at 24. We'll figure something out. And people are making all sorts of rosy assumptions. And I'm seeing there's a couple of properties yesterday where my bid price was generally between 100 and 110. There's 3 pretty similar properties, and they were all going for 125 to 135. People were literally outbidding me by my entire profit margin expectation. And so, let's see what happens.
So how does that compare up to? Is that like 90, 95? Are you getting a lot of weekend warriors that are overbidding just to get a deal done and overpricing the market because they want to get a deal done? They got money burn a hole in their pocket for the most part, Colin?
Yeah, there's actually a mixture. So you're definitely seeing some, newbies coming in and just paying whatever it takes to get a deal, almost not caring if they make any money or not. And that's obviously a recipe for disaster for a newbie. So you have those guys that are coming in for the first time and not realizing what their holding costs are really going to be, not even realizing maybe that they need to pay another 2.5% to the courthouse once they bid on a property. I mean, there's all sorts of stuff. And then you have the big companies, you have your Invitational Homes, you have your Triton Homes, these big players that are big buy and hold players that literally own tens of thousands of properties, and they're happy buying a house and just fixing it up a little bit and getting a 6% return. So they don't want a profit margin. They're just bidding it to get a 6% return. So, and then you have flippers like me that need a margin between buying it, holding it, fixing it up, and selling it, and obviously all the sales costs that you have when you're selling it as well. So you're competing. It's difficult when the inventory is low and you're competing against people that don't require a profit margin. But, I mean, I'm still getting a few, still buying, probably 2 a month, but I'm having to look elsewhere for deals as well.
But that leads to a couple questions. One, obviously, we know that these big guys have really cheap money, 1%
Exactly.
or less. And so they can make 6%, and it's a 600% return on investment for them, versus us, it's a little bit different. If we're borrowing at 6 and making 12, it's truly a 6% difference. Let's first, for those that are asking that may not be in the Florida market, familiar with the foreclosure process, if you're bidding up, say 110 in an auction, do you have to have all that 110 at the close there for the day, or do you have a time to pay over time? Do you have to pay a deposit? How's that work in the Florida market?
Yeah, I mean, it's not for the faint-hearted. It's not for newbies really, because if auctions are generally at 10 or 11 a.m. every morning. They run in order. They're 2-minute auctions. So you put your bid price in. If you get outbid, they might extend the clock, but the clock runs down, and whoever's the highest bidder is the bidder. And if that was me, they will immediately deduct 5% of my bid price that I need to have in escrow. So if I have 5,000 in escrow, I'm not allowed to bid more than 100,000 on anything. So they'll take your 5%, let's say at 11:30 in the morning. You need to wire them the balance, all the rest of the money and the closing costs by 4 p.m. the same day.
Sure.
If you don't, they'll keep that 5% deposit and they'll relist it again in a few weeks. So you need to have, and you're not getting, you're obviously assuming any title defects, you're assuming any liens, you're assuming any costs to deal with any people that might be still living in the property, tenants or occupants or squatters or whatever it might be. So yeah, you really need a good title search. You need to make sure you're not bidding on a HOA foreclosure that's got a mortgage that's still going to stay there, or that you're not bidding on a second mortgage and there's a first going to be there, which is rare. I mean, the majority of them are firsts. But utility bills can be very nasty. I've had several, especially on houses that have been vacant for quite a while. I've had several bills that have been in the thousands of dollars, like a $3,000 water bill. It's just atrocious. Just water companies are just adding every month, and they've got you. Because when you ring them and say, I need you to turn the water on, it's $3,000. And I'm like, that's outrageous. You want me to turn the water on or not? I've got a monopoly on water to that house, so you're going to have to do it. And but yeah, you do that. You get your title after about 2 weeks. So you can't have if you have a private lender and they want a mortgage, you can't give them a mortgage for literally about 2 weeks. So you're going to have to fund that money either with somebody who will give you an unsecured loan, or just with your own money. So despite all of those hurdles and restrictions, there's a lot of people doing it because you can get good deals. We've had a lot of fantastic deals in the auctions over the years.
Yeah, it's a little bit here in Texas. You have to have all the money at the time of bid, literally. So you have people with sometimes hundreds of thousands of dollars in cashier's checks waiting, they're bidding on it, and when it's bid, you've got to pay all the money in checks, in cashier's checks before the end of the day. They don't accept the wire. So it's always interesting to see how different.
And you have to be there physically, right? Which for me is crazy, because I used to be bidding on foreclosure auctions in Tampa while I lived in Spain. I was doing that stuff, and the great thing about Florida is that I can bid on Pasco County at 10 and Hillsborough County at 11 and Sarasota County at 11:30, or multiple ones at the same time. And you just have your different, I know people that have 5 or 6 screens in their office, and they've just got different auctions running at different times, and you can just bid on whatever you want and wire the money if you're the highest bidder. Texas is totally different, because you literally need to be there with cashier's checks. And not only that, you need lots of denominations of cashier's checks, because if you've got a check for 100,000 and you win something for 80, you're giving them 100, and you might be waiting a month to get back your 20,000, So, but still,
it's definitely, well, it's a nice thing. Florida has their auctions online, because we've used logged in to see what typical properties that went to foreclosure that were similar to the ones we had, to get an idea what they would sell at the auction. We did that with multifamily, some smaller multifamily in West Palm Beach. We've done that there. We've done that in Hillsborough County, done it in Pasco, stuff like that. So it's one of the nice things. Yeah, you don't have to show up the auction in the rain, snow, or sunshine. You can do it from the comfort of an office, which is really nice.
You do. But I mean, that results in I'm competing with 25-year-old interns working for hedge funds in New York, which I'd rather not be. At least if you have to turn up there, you're a bit less competition, right? So pros and cons.
Well, and then we have it once the first Tuesday of every month versus on a daily basis. So it's a different ball game that way too. Now, let me ask you a question. You talked about bidding the foreclosure auction. What are some other ways, and you don't have to give away the good juice, but what are some of the other ways that you're leveraging to find other deals? What other lead sources or marketing are you doing to find property there in Tampa, Colin?
Yeah, I mean, look, if you want to get any kind of scale or any kind of reliable inventory, you got to have as many ways as possible. You got to have a lot of strings to your bow. So auctions was one of them, and we got very good at those. There's obviously other private auction websites as well that aren't the public ones. You have places like auction.com, Hubzu, Zome with an X. You can kind of look on those. They, Hudson and Marshall, they have inventory as well, where you can just create a username, log in, and with those, you don't have to pay all the money at once. You generally have 3 or 4 weeks to close it. They all have little differences between hard money and deposits you have to pay and whatever else. So they're always good. Wholesalers is a big one. It is a very worthwhile exercise if anybody has a specific market they're going to focus on, to network with the local wholesalers, to get yourself to those RIA meetings, announce that you want to buy properties, hand out your business cards to the local wholesalers, make sure you get on their mailing list. So I'm getting emails and text messages all the time about potential deals. And in the market we're in now, you literally, if a nice one comes along, you better be jumping on it within 10 or 20 minutes and wiring them, non-refundable deposit within 30 or 40 minutes. But you can still get good deals that way with good profit margins. I got one I'm buying one this week that I got last Friday. It was an email that went out at 9:30, and I got a follow-up text from the guy saying, "Hey, Colin, you better take a quick look at this." I looked at it, rang him at 9:40 and sent him the money at 9:50. And there was like 3 or 4 other guys trying to get it, even offering more money than I was. So you have to lock them up very quickly. But either way, build those relationships. They're going to be good for you. MLS, you can still get deals on the MLS, especially there's some REOs, properties that have been through the foreclosure auction, but the bank have taken them back and then they've just listed it with a local broker. So there might be a lot of fixer-uppers basically on the MLS, or alternatively just a lot of dated houses, kind of old lady nice houses that were maybe 1970s and 80s homes that haven't been updated in 20 or 30 years. They make very good buy and hold rentals. If you want to buy them, spruce up the kitchen, replace the AC or whatever, they can make great rentals. I've helped a few friends in Tampa kind of do that. Sometimes they can make good flips, but I mean, the margins are a little tighter now, but traditionally we have bought plenty of properties on the MLS. And again, there are certain realtors that might specialize in getting the kind of nice old lady houses or getting the REOs. So you can do that as well. And of course, there's the obvious one where you can do your own direct marketing and just kind of target absentee landlords or target the probates or the divorces or the evictions, or just kind of get creative with how you can find buyers who might be motivated to sell, and then just kind of send them. People used to just send letters, and nowadays you need to do more. You need to get that list, you need to send them letters, you need to be appearing sneakily on their Facebook profiles and their Google profiles, you need to be sending them, you need to be doing tracking their phone numbers and their email addresses and sending them voicemails and text messages. You do all that sort of stuff, you'll get, which is what a lot of wholesalers do. You can get yourself a handful of deals as well. That's a skill worth learning. That was never my particular expertise, but it does work. Some people have had tremendous success just doing their own marketing and finding their own off-market deals.
Yeah, wholesalers, Tampa's always been a big market for wholesalers. I mean, you throw a rock, there might be just as many wholesalers as there are realtors. And I'm joking there, but there's always been a lot in that neck of the woods, to move it, because there's always been a lot of inventory for the most part. And I love the fact you're talking about social sleuthing, as we like, or Facebook stalking borrowers or distressed people, because we do the same in the note business and tracking them down and trying to get them back on track there for you. Now, you mentioned the rental market's strong there. One of the things that we like to always do is, okay, what type of rent rate should we avoid? And what I'm saying is, like, if the market rent rate for a property, I'll give you an example. Detroit, anything at $500 or below is like a 2-gun alley. You don't want to go into that. Is there a rental low, floor that people should avoid going under? 800, 500. What do you know what that number might be? And I know it'll vary by zip code a little bit, but if there is a number that you see right off the bat, you're like, oh, that's a bad area.
Yeah, I mean, obviously there are areas in downtown Tampa that are quite rough, but they still might be expensive to rent, but they're still quite ghetto-y. They might only be 2 miles from, condo tower with $800,000 condos, but they're in a very rough area with, the kind of place you drive by at 11 in the morning and there's a bunch of dudes sitting outside in fold out deck chairs having a Budweiser and nobody's got a job. And you're like, not really the kinds of tenants you want, you know what I mean? And you kind of, if you drive by and I see a bunch of guys sitting outside in deck chairs just kind of shooting the breeze, I'm like, I don't really want to own in here. So they might rent for $1,100 for this tiny little house, and the house might be worth 300,000, but I don't want to buy there. So I go to the suburbs, the lower middle class suburbs, which are 30 minutes away from all the waterfront and the cruises and the big businesses and the big banks. They're just suburban properties, a lot of regular folks in there. And in those areas, you want to avoid stuff that's generally under $1,000 a month. Okay, so under $1,000, you're generally dealing with maybe scruffier multifamily homes, or homes that have a ton of deferred maintenance, and the landlords are kind of slum landlords and they don't want to update anything. And the only kinds of people that will rent those houses are the people that won't qualify for the nice houses because, the credit scores might be too low, or they might have evictions on their records or criminal records or whatever else. So I kind of target, if you have a nice, cleanly renovated, rent-ready house in the, 150 to 200 range, you're generally looking at rents of nowadays of about 1,200 to, 1,500 a month. But, anything above $1,000 is generally okay. But the main thing is make sure you vet your tenants more so than, number one, make sure they can afford it, but make sure they have a record of paying on time and good clean history.
No, that's exactly right. I mean, it'll vary on the market, but that $1,000 mark is what I thought it might be at roughly. Mm-hmm. And you still got to double check all your due diligence, but anything below that, unless it's a condo or a multifamily, you got to definitely check into it and make sure it is not in a rough area and that you aren't going to, the main source of income isn't your tenants recycling the Budweiser cans. All right.
Yeah. I mean, don't get me wrong. I own some rentals where I've got a fourplex where the rents are $600 a month. And it's okay because their income has all been verified and some of them have been living there for 10 plus years. And the manager keeps them on a, tight leash. They don't give them leeway for paying rent late and whatever else. So, I mean, it's okay. I mean, but I wouldn't, it's generally easier to deal with someone paying 1,100 or 1,200. They generally aren't going to have, a crisis with an unexpected $400 car repair, for example, and everything just gets thrown out of sync for your entire rest of the year rent payments because of one unexpected car payment. So if you're kind of sticking, tenants generally their net income needs to be about 3 times the rent. And if you're kind of in the kind of 1,100-1,200 and they're earning kind of 40,000 a year, for example, they're generally okay to absorb those payments. That will always come up. But if you're in that other area where you've got these $500-600 rentals, that's only okay if you have enough of them so that they kind of balance out. But if you've just got like 2 properties and they're $600 a month, you're going to have a lot of, your income's going to vary a lot.
Yeah, no, that's such great counsel there, because I agree with that there. If you're not in the rental game with the number of doors, your costs to maintain that really go down. So it's the same thing. When you pick a strategy, stick to one strategy for the most part before you dive into a second strategy, because you're diluted a lot. I'm sure you would agree to this. We, especially attending all the different, the expos and things in education, when you see investors start adding different tactics or tools to their tool belt, and they water down their focus, those are the ones that run into most amount of trouble because they don't have that, strength in numbers of deals to offset, mistakes or tragedies or things happening. You know what I mean?
I do. And kind of leading on from that, I think it's, I learned the kind of hard way. I spent many, many years just selling real estate all over the map. And I very, very modest success and a lot of crappy quarters where I was earning hardly any money. So my experience is much better to go deep before you go wide. And once you've gone deep and you've locked that in and you have people that can run it for you, then you can branch out into another area. But I'm not, if you're a new wholesaler and then you're trying to get a single family home over here and then a multifamily 30 miles in the other direction, and then a pool home 20 miles in the other direction, and then a, manufactured home, 10 miles over there, you're never going to have any meaningful success. I think you need to focus on a niche. You need to pick a couple of zip codes, a couple of price ranges, property types, motivated seller types, whatever it is you want, and just try and get deep on that before you spread out. But if you try and do too many things at once, too many property types at once, you're not going to work. I mean, one of the ways we were able to flip so many houses, for example, we often had 15 or 20 renovations on the go at any one time, is because they were all in the same area and they were all the same type of house. They're literally all within 2 miles of each other. And not only that, but we were doing the exact same thing to all of them. All the kitchens were the same. The paint was the same. The vanities was the same. The fences, I mean, the paint, everything was the exact same. I'm sure our guys were so sick of putting the same tile backsplash in every home, but you freshen it up every couple of years and that's it. So until you can kind of get those scalable properties, don't start trying everything else, because just imagine you're trying to renovate a $50,000 house, a $300,000 house, and a $500,000 house in totally different areas. It's so much work for not a whole lot of return,
Well, and that's the beautiful what you said, because then it becomes cheaper to buy, your tile, your carpet in bulk, because you're going to use it, your paint in bulk, because it's going to be the same vanilla flavor that sells. And I love what you said about being in one area too, is that your buyer that may have missed out on one can go next door just down the street to find another one that's very similar to what they may have missed out on or not being able to get approved for in time as you were moving that property. You know what I mean? Your past looky-loos are now your new buyers for the most part.
That's it. Because like a lot of the stuff I've sold over the years has been to out-of-state investors, particularly in California, where they're just looking to buy solid rentals. A lot of these guys, I was dealing with people that might have had an $800,000 condo in the Bay Area that they inherited from their parents, and they're getting a 2% return on it. A lot of those guys did 1031 exchanges into 6 houses in Tampa with change left over after they'd financed it, and they'd tripled their cash flow. So when you're dealing with these investors that are just looking to buy a nice rental, you just need to sell them on the concept. You need to sell them on your reputation, on your competency, on the neighborhoods, on the product type, on the property manager. And once you get through all that, the houses are just widgets. They're just little concrete boxes that throw out rental income and pay down your loan for you and give you some tax advantages. It doesn't really matter if you're getting 1, 2, 3 Main Street or 4, 5, 6, Main Street. Doesn't matter. They shouldn't care, especially if it's an investor. A homeowner, fair enough, they will care. But if you're selling to investors, landlords, as I did over many years, if you have a lot of inventory in a similar area, they don't care much. They're just looking at the bottom line.
All right. Now with your fix and flips stuff you're doing right now, are you using your own money or using other people's money to finance a lot of stuff? I know that you mentioned a little bit about hard money previously, but how are you financing that?
It's a mixture. I mean, I'm not doing the same volumes I was, so I'm able to use a little bit more of my own money. But yeah, I mean, I do put private money on most of them. I mean, at the minute, all of them really that I own, I have private money on. So these are generally, some of them are just local friends here in Tampa that have successful careers in their own right, or company owners that just have a couple of $100,000 that they're happy to put to work. There's some out-of-state folks that have a lot of experience in real estate investing, but now they're into retirement age and they don't want to manage the property managers or manage the tenants and deal with the boilers and the roofs and all the rest of it. So they're just happy to have, give me a line of credit, whatever it might be, $1, $2, $3, $400,000. A couple of wealthy kind of doctors and surgeons, that similar kind of thing. They have jobs that earn them a lot of income, and they need to try and keep putting some of that to work. So they will lend it out as well. So a lot of private money, and that you kind of build those relationships slowly. And you need to show them like 3 times more information than they need. Have nice proposals showing what your plan is for the property, what your profit margin is, your renovation budget, your holding costs. Put it in a nice little package. Have your loan and mortgage documents ready. Have a title agent ready who can record the loan for them and mail them the originals. Just kind of have everything figured out. And you don't need to just Google it and figure it out. Just ask somebody who has done it and ask them to teach it to you, either for free or pay them $500 to teach you how to do it. It's going to be worth it if it can get you potentially millions of dollars in loans for your next 10 or 20 deals. So I have used private money a lot. I've avoided the kind of traditional hard money loans, which is from professional lenders. That's their business, is lending money. It is a viable strategy, but I was generally borrowing money at 8 and 0. So 8% interest, no points, no closing fees, no appraisals, no surveys. A lot less red tape and paperwork, which is great for me. If you can do that, that's a lot nicer. But other folks, they do have to do the hard money. They might have to borrow initially at 12 and 2, 12% interest rate and 2% origination fee up front, and then a $300,000 appraisal fee and a $300 admin fee. And and all that, and just tons of red tapes digging into your tax returns, your LLC docs, and all the rest of it. So that's a little bit more painful, but it's doable. I mean, they can help you to scale up. They have deep pockets and they can help you to scale up but you need to build in extra margin for those extra loan costs. But finding it's very, very, you can't scale any business in real estate really without borrowing money. So you need to learn that side of things. And obviously we did our first probably 7 or 8 flips just with our own money. Just kind of a proof of concept. Is there a market for this? Can we buy them? Can we sell them? Do we know how to fix them up? And then after that, we were able to approach private lenders. And if you don't have that luxury of being able to fund your first handful, then you're probably going to have to look at either paying very high rates or maybe doing joint ventures with a more experienced investor who knows how to run the numbers better than you, and you'll do a lot of the heavy lifting and he'll just kind of oversee it, be a little bit of a mentor and guider, and take half the profits. That is well worth it, doing it for the first 4 or 5 deals until you can kind of move onwards and upwards. But don't worry too much about paying the high fees. If it works and you can make money, do it, and then the fees will get better as you move along and gain experience.
Well, that's the thing, experience and putting your pitch decks together and having that experience, or having somebody on your team that can help handle that allows for you to have reduced money costs the more you market out there. Now, with you having such an international flair in the markets, are there any markets out there you've been keeping your eye on? I mean, we're seeing increased distressed assets in Italy, Spain, Greece. Any of those markets kind of get you excited, or even back home in the UK? We know real estate's expensive in the UK, but anything you keep track of internationally?
Yeah, I mean, I did a lot of business in the UK back in 2012, 13, and 14. I marketed a lot of student apartments where people would buy an old abandoned property within a 15-minute walk to the university and convert it into 50 kind of bedrooms with a communal kitchen and living areas on each floor and a gymnasium on the bottom. And they were great. They were, I used to sell those things for like 60, 70,000 pounds. The developer often offered a rental guarantee of maybe 7 or 8% during the first 2 years. And they were near a very good university, and there's a huge amount of demand. You had tons of international students going to places like Liverpool and Manchester and Birmingham and London that were paying top dollar to rent these brand new university flats, because obviously, if you can imagine, like back a generation ago, most student accommodation was very low end, very scruffy and moldy and leaky and everything else. Nowadays, it's like a hotel, and if you can afford it. So I did well from that, but obviously I moved on to Florida. It was taking up so much of my time, and we were scaling that up. And then obviously you had stuff like Brexit happened, and then the COVID happened, where university students couldn't even go back to college anymore. And then Brexit stopped international students from traveling. So, I did some distressed sales in London back in 2009 and 10, some commercial stuff. Again, similar in Dublin, did some apartments in 2012 and 13 when they were extremely distressed, but the prices have just gone through the roof in all the major cities and even some of the secondary cities. And to be honest with you, and I look at Spain a lot. My wife is Spanish. I lived there for many years, and I have friends that have real estate businesses, but the margins are so thin, the access to money is so difficult, and the cap rates are so low, is that I can't just not do somewhere like Florida or even move out to Ohio or Alabama or Jacksonville. It's a much more dynamic market, and it's difficult to appreciate that if the US is the only market you've ever been involved in. But just to have a 30-year fixed loan that you can get for like 10 or plus properties, to have, credit unions and local banks that will lend you money to buy a 20, 30, 50, 100 unit apartment complex, to have private lenders, professional and otherwise, that will lend you money to scale your fix and flip business, to have RIA meetings with people that are guiding you, to have mastermind groups for people that are telling you how it works and how to scale up. It's a totally different league here compared to Europe. You don't have practically any of that stuff. I mean, I have a friend in Madrid that buys apartments and fixes them up, and he's lucky to get 50% finance. Wow. And he's spending hundreds of thousands of dollars of his own money on each deal. I still own a property in Madrid that we used to live in. It's worth 500,000 euros, and we used to rent it out for 1,500 a month. I mean, the cap rates are just terrible, like 2 or 3%. So why would I do that when I could buy 3 properties and rent them all out for 1,500 and still have change out of 500,000, you know?
Yep.
So it's, and obviously I'm summarizing, there are people making good money in Spain and Italy and Ireland and England, there are. But I think for some reason, I think you have to be literally 5 times as smart and as hardworking to make $1 million in real estate in those places compared to here. I mean, we're very lucky to have the resources that we have here to do it.
Yeah, no, I totally agree to that. Now, a couple very, very important questions. Okay. Mm-hmm. Guinness or Irish whiskey? What do you prefer?
I like both. Guinness first, and then you get whiskey when you're full of Guinness. You like, I'm too full now. I've had 5 pints. I want to get a couple of whiskey chasers. So,
couple Irish car bombs to go along with it. Get them both at once. That's what I figured out. And then football. Who's your team? And we're not talking Tampa Bay football, even though Tampa Bay won the Super Bowl. You may be a fan there, but I'm sure you've got the original football roots. We get a big fan of any specific club in the Premier League or anything like that?
Oh, soccer clubs, yeah. Manchester United was my team growing up. Roy Keane, famous Irishman, was their captain during a lot of the 90s. He was a fantastic player. I used to watch them winning the Champions League in university. I remember that very well. They beat Bayern Munich in 1999. They were literally losing 2-1 in the last minute, and they got 2 goals in extra time to win it. It was amazing. And then when I went to live in Madrid, Spain, I started supporting Real Madrid. And obviously they've had a fantastic soccer team as well, and a fantastic culture of soccer as well.
Yeah, we're getting a team here in Austin, I guess, this year for the first time. So we're pretty excited about that, but been watching a lot of that stuff. Watching a lot of the Amazon documentaries on Manchester City and some of that stuff there to get familiar with it, and actually really looking forward to it having here in the state, here in Austin for the most part. But that's it's always interesting to see. I love your experience, and when you hear people, because I know you're passionate about helping people, you can hear it coming across with what you've shared in the last few minutes here, how to get started doing things and getting started there. Are you working with other investors in the area? They're helping them out, coaching them, or providing anything to help them accelerate their career?
I do. Yeah, I do help people with general coaching. I do help them have those templates and systems and documents that they need. Just simple stuff like how do I structure a deal? How do I find the lender? How do I get loan documents? How do I work out what the after repair value is? What types of spreadsheets do I use to work out how to present my offer, how to work out the numbers, how to sell it? I mean, yeah, I do help a bunch of people, mostly local people, but also out of state people. And I just like doing it. It's not like I make much money out of doing it. I just enjoy giving back, because I've received a ton of wisdom from people further up the ladder than I am. And I still do. I spend a lot of time and money on masterminds and learning about how to scale and how to be a better person and how to have more money and more time at the, simultaneously. And there's just no limit to the fun you can have in real estate and the types of people you can network with. So it works both ways. The people above me in the ladder, people below me in the ladder, I love dealing with them. I just like networking.
Yeah, no, I agree with it. It definitely comes across the passion there. Who's been you got a name or two that's been a very, very helpful in your journey here in the States?
I mean, my business partner, David Shaw, my ex-business partner now, we were working together for, 12 years. And we split up recently, like about a year ago, but very, very amicably, very, very amicably. But we worked together. We figured out all that stuff together in the early days. We had a lot of ups and downs and a lot of fun together. And we had the right kind of personality balance to kind of move our way forward. And we had a tremendous last kind of 3 or 4 years in particular. And now we're just kind of doing our own thing and building our own businesses, really just for the benefit of our immediate families, because what he wants to do for the next 5 years for him and his family is different to what I want to do. But I think we both had enough accumulated knowledge and success together that we're able to do that while still kind of staying in touch with each other and bouncing ideas off each other. So he's been probably the biggest impact on my career so far. And obviously I do get on, the phone and Zoom with other people out of state, fix and flippers, out of state property managers. I was lucky to just invite a bunch of people onto my podcast and just quiz them and ask them everything I wanted to know, which I'm sure you do as well.
Let's talk about the podcast here. You've been doing that for a little while, having a lot of success. Let's talk about it. How do people find out about it, and what's your focus with it, obviously?
It's literally called Colin Podcasts About Real Estate. That's what it is. Type that in, Colin Podcasts About Real Estate. And it's just me talking to people that I like and asking questions that I want. I'm a very curious person by nature. I always have been. And I think that's just good. If I can go on a slight tangent, just
Sure.
If you can encourage, yourself and more importantly, your kids to develop an interest in reading from an earlier age, that's huge. Because if you can get someone to read books, get into that habit of reading every night, even if they're super tired, you do them such a big favor, Scott, because it improves their curiosity, their imagination, their vocabulary, their writing skills. It's just brilliant if you can do that. And I got into reading from a very young age, and that's where a lot of my curiosity and passion and willingness to learn and experiment and take risks kind of followed from that. So, with the podcast, I get a lot of, I've got wholesalers, I've got fix and flippers, I've realtors, I've lenders, I've property managers, I've currency specialists, I've multifamily syndicators. I mean, literally a little bit of everything. I have a lot of people I've coaches, real estate coaches on the show, just people that are there to get you enthusiastic about real estate, that are there to kind of talk about their journey, their ups and downs and their goals and their wants and needs and what they love from it. And I'm still figuring it out as I go along. I've done 40 something episodes now, and it's a lot of fun. Comes out every Thursday.
Yeah, it is definitely a lot of fun being a podcaster, and we've got such a great mixture of people. And I think a lot of real estate investors, experts, kind of have a positive mindset because we've all been through ups and downs, good deals and bad, and have developed thicker skins. But we all have that kind of servant mindset. We want to give back to help others avoid those same type of mistakes, to get up the ladder faster and help those out as best we can. Everybody can tell that's definitely a big part of your heart. Now, you mentioned you've got some goals here for the next 5 years and you're making some changes. What is your biggest goal for the next 12 to 60 months that you're really focused on, Colin?
Well, my biggest personal goal is, I've been living in Tampa for many years and doing well in real estate, but my wife is Spanish and my kids are kind of half Spanish, half American now. I don't even consider them Irish, poor things. They should be, but they're not. But we're moving back to Spain this summer. So like July, August 2021, we're relocating back to Spain. And so we're kind of organizing the logistics of that. I've just managed the renovation of our house in Spain remotely. So that was a bit of fun. And just organizing schools for the kids. I'm setting up a lot of systems so I can continue my real estate investing here in the US from Spain. I mean, I used to do it from Spain, 6-7 years ago, and I'm going to do it again. One of the things I've set up to kind of create additional, passive income streams and make it easier for me to get involved in real estate is that I'm launching a land flipping business called CGM Land, cgmland.com. Where, as a guy who renovates a lot of houses, it just seems so nice, the idea of buying a piece of land for 50,000 and turning around and selling it for 75 without having to schedule a bunch of permits and repairs and deal with realtors and all the rest of it. So I'm looking forward to that. I'm going to be doing a bunch of seller finance deals to create passive income streams. So you can maybe buy something for 20, sell it for 50 with a 20,000 deposit and then a 5-year note at 11%. You can get good interest rates on those. Yeah. So I'm looking forward to creating those passive income streams from land investing. I enjoy lending to local wholesalers and local flippers as well. Some of the guys I coach, I lend them some money. I still do a little bit of teaching people about foreclosure auctions. So I'm still actively involved in a lot of stuff. Even the fix and flips that I do, I've like I said, I've gone so deep in these neighborhoods and I know all the people I need to know. I mean, the people that will do the roofs, the ACs, the kitchens, the bathrooms, the property management, the inspections, the drive-bys, the permits, they're all on speed dial. And I'm still flipping houses here from Tampa, but I don't really look at them anymore. I don't really drive there. So I'm going to keep doing that from Madrid, but it's just a mixture of, number one, continuing to network. I want to 10x my business in the next 2 years. And the land is going to be a big part of that. I want to increase my passive income, twice as fast as my active income. And obviously when we can travel, I'm going to keep traveling, but I've a lot of stuff going on, but the big one is just getting my family moved and settled into Spain and I'm just blessed to have a kind of a good passive income stream coming in from real estate, and just a lot of possibilities for new active income streams this year and beyond.
Yeah, you know, Madrid is a beautiful city. We've had a chance to spend a little bit of time there in the summer travels. And if we were to move abroad, Madrid and Barcelona, Spain would probably be one of those countries we'd look at the most. Just because it's great. People are awesome there. The food, oh my God, the food and the wine is phenomenal, right?
It is dangerously good. Yeah, the food and the wine, you do miss that a lot. I mean, Ireland's got nothing special food-wise, and it's very expensive to get good food. Even here in Tampa, you have to pay a fortune to get good food. But in Spain, you get amazing food for ridiculously low prices. So yeah, I do miss that a lot.
Have you been able to find any haggis there in Tampa at any point?
And if I did, I wouldn't order it. So I wouldn't trust haggis outside of Scotland, to be honest with you. So.
Good stuff there. Colin, what's the best way for our listeners and people watching this replay or catching on the radio network out there? Because we do, Tampa is one of the cities in the country that we are syndicated on the radio stations out there in neck of the woods. So what's the best way people to reach out to you, connect with you, and see what you're doing?
Easiest way is just to go to my website. It's called colininvestments.com, COLIN investments.com. You'll also find me on Instagram, Facebook, LinkedIn under either Colin G. Murphy or Colin Investment. So just check out those links. If you go to the website, you'll see a lot of videos, podcasts, reports that are all free to download. There's buttons there where you can schedule a 20-minute chat with me, and that's a good place to start.
Awesome, man. Thanks so much for coming on the podcast today and just sharing some great nuggets. Just a great conversation, man. I'm gonna have to give you a call here on St. Patrick's Day and host a pint with you virtually at some point.
Let's do it. I love that.
Sounds good. All right, guys and gals, that's going to wrap it up for this episode of the Note Closer Show. Colin, man, provided a ton of nuggets. Go check him out. Listen to his podcast. Go check it out. Definitely great. So I was honored to be one of the first 40 episodes there. So glad to be a part of that. But there's so many different things. You can take so many amazing nuggets and such great counsel that Colin provided there. And that's one of the things I was so excited to have him on. Not just talk about the Tampa market some, but talk about how he's putting systems in place, doing this remotely, selling real estate from anywhere because he's using marketing systems and virtual teams to make things happen. And you can do real estate from anywhere. You don't have to be there and look at every single property and be a control freak about everything. Systems, focus, go deep, as he said, before going wide. You'll be a lot happier person. So go out, take some action, everybody, and we'll see you all at the top, everybody. Bye.